This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, happy Friday all. It's Max here from Daily Market Movements and welcome to another episode where today we're going to be analysing the S&P 500 futures chart on this Jobs Friday. Just before I start today's video though, anyone who's interested in joining my free analysis group over on Telegram where I post research on a daily basis, completely free of charge, then please do not hesitate to scan this QR code on your screen. Let's start here with the S&P 500. Past couple of hours we've been ticking up towards the upside, currently trading at around 3,746. And as I mentioned at the start of today's video, today it is Jobs Friday. We are getting the non-farm payrolls in approximately 30 minutes time. The expected figure is 200,000 jobs created in the month of October. I was actually speaking to an analyst over at Morgan Stanley earlier on this week, and the whisper number on the street is around 180k. So if the number did come in softer than expected by 20,000, I think that would give the markets a very nice rally towards the upside, because don't forget, we're currently trading in a stock environment where good news is bad news and bad news is good news due to the fact we are correlated to the Fed. But I have to tell you guys, I don't think the number's going to come in weaker than expected. I think that the number's actually going to come in at around 230, maybe even 240k. And this is largely due to the fact we had that very high JOLTS number earlier on this week, where over 1 million jobs are still on offer. Right now, if you have someone who's lost their job, they're just going to quickly, go over the other side of the street and get a new job, because there's so many jobs on offer right now. Even here in the UK, I walk around and every supermarket says hiring, McDonald's says hiring, every coffee shop says hiring. People just don't have enough staff. So it's incredibly hard at this moment in time to see a jobs number which is a lot lower than expected. It is starting to tilt. You're starting to hear some big companies like we had Lyft this week and Stripe come out, and they've sacked about 13% of their workforce each. So it is, you are starting to see cracks, but I still think it's a little bit too early. And personally speaking, I think the number's going to come in line or higher than expected. I don't think that we're going to get a lower number due to that JOLTS figure that we got earlier on this week. And of course, if that is the case, that's going to send the markets crashing towards the downside. It's going to be lots of volatility, of course, likely to see a 1 to 2% move on this jobs number. So if we take out the swing lows that we achieved yesterday down at around 3,700, then I think that opens up the door pretty much down towards 3,643. I think the best way to see this is by creating a fib chart. Yesterday we pretty much hit that 0.5% of the previous acceleration that we've seen here in the S&P 500. But again, if we take up 3,700, that opens up the door to pretty much 3,650. That's the low that we achieved on Friday the 21st of October, and that also represents as the 0.61 fib area. So those are the areas that I'm looking for. Also on the 4-hour, we are forming a death cross with a 50-day EMA about to pierce below the 200. So of course I'm going to be keeping my eye out on that. But if we did take out this 0.382 fib area, then of course the next target is all the way up at around 3,815. So those are the areas that you want to be looking at: 3,700 and 3,756. If we break towards the upside, that opens up a move towards 3,815, and vice versa. If we take out the swing lows down at 3,700, then that opens up a move down towards 3,650. But my bias going into the jobs number is that we are going to get a strong number.